All right, guys, thank you for those updates this morning. Right now, we're going to welcome our editor-at-large, John Kingston, to the show. He's got a pulse on the employment reports for the last month. John, these numbers were released on Friday, and coming in, we've got some really interesting developments in kind of the moderation of the warehousing sector. But first things first, give us kind of an overview about where we sit right now with truck transportation jobs.
Jobs were up despite, all the talk about a slowdown. Now they were up by less than they've been. I'll give you a little example. Since the big collapse of April 2020, truck transportation jobs, which are not all driver jobs, they're jobs in the truck transportation sector, have been up every single month except one. And this year they've been up phenomenal. They were up 6,800 in January, 11,000 in February. Then March they were down 2,700. That's the 1 month since April 2020 they were down. Then 14,900 in April, 15,700 in May. I mean, these are just gigantic gains. And then June was 6,900, and July was just 3,500. So, a much smaller rate of growth than we've been having. But given the, some of the weakness in the sector, it's still a fairly impressive performance.
Definitely impressive overall, John. And with so many added jobs, are you anticipating that we're going to start to see a bit of a shift potentially in the participation rate as well?
Of course, they don't break out a participation rate just for just for truck transportation, obviously. And I will tell you that I after the report came out on Friday, I sort of wanted to go in and read all about the participation rate because I know it's very important, and I didn't, but I'll bet you did, Anthony.
You know what, John? You're right. I did. It ticked down just 1/10 of a percentage point, so not a huge movement at all. So definitely encouraging to see that there wasn't too much of a drop off, but still below the pre-pandemic level. What are some of the other developments that you are seeing in the jobs report at a high level, or any trends that are really sticking out to you? I know this warehouse number is huge, but is there anything else that might be concerning or really encouraging?
No, it was the warehouse number that was really, really eye-opening. First of all, let's note that the Bureau of Labor Statistics I believe it's every February does kind of like an annual, because the February is the report that comes out and it has January data. So they come out with kind of a remodeling. They gather data for the year and then they rebuild their models based on new data. So when the annual remodeling came out in February, it posted a gigantic gain for warehouse. And it wasn't just 1 month. Basically, the remodeling affected the numbers all through 2021. And at that point, you could state, and you still can state, but at that point, you could state that there were now more warehouse jobs in the country than there were truck transportation jobs. And, the two are obviously always going to be linked. So that was really significant. And the analysts I know, the few analysts I know who follow the truck transportation sector, all made comment on it. The jobs were down now pretty considerably in some various revisions. So when the June numbers when the numbers come out, they're subject to revision for 2 months. So like in June, they reported May numbers, and that was preliminary. In July, they reported June numbers, but they also reported May numbers, and those are preliminary. And then the third time around, they kind of go permanent, except for the annual redoing. So what happened was initially in early July, they reported the June numbers for warehouse at about 1.821 million. And this time they came out when they revised the June numbers. And remember, this is not a full remodeling of the model. This is just for this sector. They knocked that down to 1.794.9 million. So that is a decrease of about, I'm doing the math here on my head, this is very dangerous, of about 27,000 jobs from what they initially reported. And then they reported for July that jobs were down about 1,000. So it definitely seems to signal that while the model last year they were picking up too few warehouse jobs, and then they remodeled, and suddenly we had a lot more warehouse jobs. Now it appears that they're indicating a slowdown in warehouse jobs, and that's not all that surprising. You're seeing reports of companies giving up leases or trying to sublease warehouse space. Maybe they grabbed too much early on, so those numbers kind of align with that.
John, that's a really interesting perspective looking at the warehousing side of things. But I also kind of want to touch on the stability of the rail sector and how we've seen kind of this very stable, like neutral, almost, I would almost call it neutrality in the way that rail jobs are going. But we still have rail companies saying, you know what, we're dealing with labor shortages too, and we don't have enough people to move this freight, which is why you're seeing delays. Those are two kind of things that are at a juxtaposition with each other. Do you have any insight on kind of why?
Well, I mean, I really don't know about why, but yeah, you are right in that the rail numbers are unbelievably boring, in that they almost never change. Hang on a second, I want to call them up. I didn't have them in front of me. But the rail numbers were actually very interesting for a long time because as they were going to, as they were making big changes in the industry, those numbers were plummeting. So, for example, let me get some numbers here. In June of 2019, not all that long ago. Well, let's actually go better than that. In January of 2019, there were 183,000 rail jobs. By 2 years from that, let's say just a year later, okay? This is, as precision railroading was being implemented, it had dropped from 183,000 jobs in January of 2019 to just under 160,000 jobs in January of 2020. Then, of course, the pandemic hit, and it dropped to about a range of 175,000 to 177,000 jobs. And it has absolutely, I'm sorry, I'm sorry, my mistake. By June of the year of the pandemic, it had dropped, yes, to about 145,000. And then it has stayed in this range of 145,000 to 147,000, give or take, absolutely consistently. I mean, it just never moves outside of that range. So yes, they're talking about labor shortages. Of course, every industry is talking about labor shortages, but their big whack at the number of workers in the rail industry came really in 2019, and they got to where they wanted to be, and they've been holding steady at that number.
John, I think this is some incredible insight coming from you. And one of the other areas that I definitely would be remiss if we didn't touch on a little bit, because you are a true market expert if there ever was one. We're looking at the diesel markets. I know you put out a Drilling Deep episode, I believe, last week around the 5th or so. Are we starting to see a turnaround in the diesel markets, or is this potentially a head fake that will just kind of start rising again?
Well, I mean, you remember, there's two ways of rising, or two ways of rising and falling. One is if the overall price of petroleum, which is primarily crude, goes up or down, then the price of diesel will go up or down. And then the second part of that is, how does diesel do relative to crude? And the fact that it has completely outperformed crude in the past few months is one of the reasons why diesel at the pump is like $1 more than gasoline, when maybe it used to be 30 cents. So that strength in diesel is still very important. I still see reasons to believe that diesel will remain strong relative to crude. I can't predict where crude's going, but I can tell you that diesel inventories remain extremely low. We are going into winter, which is a heavy season for not necessarily for diesel consumption in trucks, but because diesel is a distillate and heating oil is a distillate, the tightness in the heating oil market, if we get a really bad winter, will also spill out onto diesel. And, I was interviewed by Rachel Premack for her Modes newsletter the other day, and I wanted to reiterate something that's in there, and that is what I am convinced is one of the main reasons why diesel is higher is the impact 2 years after we thought it was going to happen of IMO 2020. And IMO 2020 is the rule that required much tighter sulfur specifications on marine fuels. One of the ways of getting there was to take an intermediate product called VGO that was mostly used to make diesel in the past, and instead kind of dump it into the marine fuel pool. A little more complicated than that, but just for purposes of time, sort of make it a feedstock to make marine fuels. That tightens up the feedstocks to make diesel. And, in 2019, we all thought, well, diesel's going to be tight because of IMO 2020. 2020 rolls around, we get a global pandemic, demand craters, and we really can't test this theory. Well, I think that theory is being very much tested right now. And I think that IMO 2020 is having its revenge. As somebody who saw that interview commented on Twitter that this was IMO 2020's revenge. I kind of like that term. This is IMO 2020's revenge on the diesel market. I think that's a factor. And that's not going away, because that's a permanent change in the spec. And the solution to make that spec doesn't change either. It's to use a lot of VGO that might have otherwise gone into the diesel market and instead make marine fuels.
It's going to be interesting to watch for sure, John. And as Anthony mentioned, you host the Drilling Deep podcast. Where can folks go to get that podcast?
Just type Drilling Deep Freightways John Kingston, and I will tell you that as after Labor Day, Drilling Deep is going to become a video podcast. So it will be available on Freightways TV.
Awesome. We're excited to see that happen, John. And thank you for joining us this morning. As always, we'll talk to you, I'm sure, again soon. Right now, we're going to toss it back over to Sydney Edwards for a look at our top stories on freightwaves.com.